Hope you're doing well today. It's Thursday, the 5th, right? 5th of August, and here for our quick morning class just to run through what I'm looking at for the day, what happened yesterday, what we could potentially see later today and into tomorrow. So let's jump into it. Let's start with, first off, what happened yesterday. Yesterday we had a excuse me. Excuse me. Yesterday we had a long trading opportunity on the ES. Remember, coming into the day, 4-hour bias was long, 30-minute bias was long. We had news that came out prior to the session, and we talked about, hey, don't worry too much about it because the market does what the market does, and we need to let the market, dictate what's going to happen. Really, Friday is the big day for us. I mean, Friday is non-farm payroll, and if there's going to be any real movement from a news announcement, it'll be following that. So leading up to that, though, we had the ADP numbers yesterday. Market did pull back. We said look for a buy on following lower highs, lower lows. So we wanted to see the market pull back, making lower highs, lower lows, lower highs, lower lows. And it did that. It told us here, hey, watch the top of this candle. If we break it, go in. It didn't break it. Then we got another signal down here. If it breaks the top of that candle, go in, and we can see it got filled here. And price did move on a little bit for us, picked up a couple of points on the ES, just utilizing that very simple breakout trading method. Same thing on crude. Crude was short. We had a bias was short yesterday. 4-hour bias was short, 30 minutes short. So we're looking for short trading opportunities. That's the inverse of what we would look at over here. Instead of looking for lower highs and lower lows, we'd look for higher lows and higher highs. So we wanted to see the market start pulling back, and then we wanted to see it break down in the direction of that current trend. And that's what it did yesterday. We saw higher highs and higher lows. So higher low, higher high, higher low, higher high. Gave us a signal, said, hey, watch out. If it breaks it, we want to be in. And it did. It broke it. And then we were able to get in and potentially ride that down for a couple of points as well. So all in all, pretty good. Gold, gold had a massive run. And then as the regular trading hours got underway, actually just before regular trading hours, it just went off a cliff and gave back all of the gains it had that morning. Gold is still hanging out here, though. And if we look, let's just make this a little bit bigger. Gold's still hanging out in a pretty tight channel. Excuse me, I don't know what's going on with my throat. So gold's still hanging out here in a pretty tight channel. That's something we'll talk about here in just a moment. So what are we looking at for today? What's going on today? Well, bias here at the S&P is still long. So we have a long bias on the S&P. The 4 hours long, the 30-minute is long as well. We can see the red over the green, although it is pretty tight. But it's a long bias currently. So we'd be looking for long trades. What does that mean? We want to see the market pull back, making lower highs and lower lows. And then, if it does break back out above the previous close of one of those lower highs, then we would go long on it. If this 30-minute flips over, if we see a pretty marked pullback here, a 30-minute flips over, you're not going to get any signals. And that would tell us, hey, just sit on your hands, don't do anything, and let the market figure out what it's going to do. I do feel like it could be kind of range bound today and overnight leading into tomorrow for non-farm payroll. So could be a good day to sit on your hands as well anyway. But we'll see. Let the market do what the market does. Over in crude, we're still looking for short trades just like yesterday. We want to see it push up a little bit here, making higher lows and higher highs. And then we'd play that short trade if it breaks back down in the direction of that current trend and a break of that previously closed higher low. Gold is a mixed bias, so we're not going to do anything with gold. Now, with all that said, in addition to what we're looking at here, just on that regular BTX method, looking for pullbacks and then trading in the direction of that current trend, we are in some channels, and we can see here on the S&P, we're in a pretty tight channel. Same thing over there in gold, we're in a pretty tight channel. So, there are some breakout trading opportunities here that you might look at taking advantage of. So, look how far back this channel goes. Gold's just been sitting here in a pretty darn tight channel. 44, and that's pretty high. I mean, if you want to get a little more conservative down here, we could really look at breaks again. We talked about 44.04 in a previous call, one of these previous updates. You know, if you want to look at a long breakout, certainly look at 44.04, 44.05. I'd say 44.04 though as that breakout point. So, you know, if we get some momentum and break back in that long direction, look for longs above 44.04. If this thing really starts breaking down, you could look down here, 43.95, 43.94 area to go short on a breakout below that. So, you know, keep those levels in mind. If you're any of these breakout trades, by the way, you want to follow them pretty closely. You know, I would use a fairly tight stop if you're trading a breakout trade, you know, and then trail it. So, you know, as soon whatever your stop point is, whatever you feel comfortable with, you know, trail it pretty quickly. So if it moves, you know, 5 points or so in your favor, you might look at going to break even +1, and if it goes to 10, you might go to 5, and then see what happens from there, right? And let it just move on. But I'd be pretty quick to lock in some profit, especially given the fact that we've still got a big news day tomorrow. You know, just to see what's going on there. Over on the S&P, same thing here. Pretty darn tight channel on the S&P. So, you know, looking for breakout. I was talking about the S&P already. I'm sorry. I was talking about the S&P and I was mentioning gold. Let me go back here. For gold, so 44.04, 43.95 breakouts on the S&P. If you're looking at gold, we're in a pretty tight channel here as well. You know, we can look at this 18. Really, you could probably even, if you wanted to be a little more aggressive, 18.16, but 18.18 would be your safest bet. If you're looking for breakouts long on gold, would be above 18.18. And if you're looking at short breakouts on gold, you know, certainly down. I'd go a little lower. That 18.10 is a level we had talked about previously. It gapped through it. But if we break down below 18.10, we could see it rolling over short. So 18.10 would be that level on the short side. So you've got 18.18 for a long breakout and 18.10 for a short breakout. But again, as I was just talking about, you want to manage those breakouts fairly aggressively, especially on the short side, to where once it's moving, it gets some momentum behind it, and it moves at least 1-to-1 for your risk to reward. You know, I'd look at either moving my stop loss to a break even +1, so it's a risk-free trade, or you know, take off part of it. So there's a lot of different ways you can manage your trades. I'll leave that up to you, but do watch those levels. Of course, the safest way, and you know, the way that we track and are most consistent, is watching that BTX method and looking for those pullbacks where they break back in the direction of the current market trend. That's going to be the one that's really riding that trend with you, and it's going to give you that best probability. But you know, certainly nothing wrong with looking at breakouts, especially when we get in these channels like we've been in, because like I've said before, it doesn't stay in a channel forever. It's going to move. No one knows what direction, no one knows when, but it's going to move. It's not going to stay in that channel indefinitely. So, you know, playing breakouts of those channels, especially when you've got quite a few days of history behind you where it's been really range bound for quite a few days, it just keeps increasing the probability that it's going to you know, move at some point. All right. So anyway, that's it for me. Have a great day, and we'll